So we want to tell you about our project to build community wealth in Baltimore and beyond. So what is the problem that we've observed that we are trying to address? There is a massive crisis of undercapitalization for the vast majority of businesses in our country. Many of you are well aware of this. Anyone who's worked in a small business, knows a small business owner, knows that they tend to be incredibly under-resourced. And the impact of that is disproportionate on women and people of color. If women entrepreneurs had the same access to capital as men, the economy would create an additional 6 million jobs over the next 5 years. New Black-owned businesses start with almost 3 times less capital than new white-owned businesses, and Black entrepreneurs' loan requests are 3 times less likely to be approved than those of white entrepreneurs. And let's face it, even though the venture capital model is held up as this great tool for innovation and high growth businesses, 99.9% of businesses in our country, it's just not a fit for them because they don't happen to be on that high growth path. Your grocery store down the street, your slow and steady growth tech platform that doesn't want to dominate the whole entire market, those just aren't a fit for venture capital. And for many, bank debt is not a fit because they're just not at the stage where they can even be eligible for that, much less support it in a way that's going to be sustainable. And according to data I've seen, 83% of businesses in our country do not have access to bank loans or venture capital. So we were so excited when investment crowdfunding became legal at a national level, and it definitely is helping. However, the results are mixed. As you can see from this data set, women-owned and minority-owned businesses are doing fairly well in terms of reaching their goals. And in fact, all businesses that are doing crowdfunding are doing fairly well in terms of reaching their goals. It's quite a high success rate. However, we are still seeing that the most underrepresented entrepreneurs are still struggling. Even if they are having success, the amounts they're raising are small. And honestly, the data are skewed by, there's a few offerings that have been happening by high tech companies that are on the path to get that venture capital funding, and they're within like a few weeks, oftentimes they're raising the full 5 million, which is great for them, but we're still not seeing investment crowdfunding being that silver bullet we hoped it would be for the types of businesses, those 99.9% of businesses that are not on the venture capital path. So, my story is 27 years of effort and not enough progress on this topic, on this issue. So when I first got out of law school, I spent 11 years at a nonprofit community economic development organization where my main job was working with small businesses to try to help them be successful. And they were always just so under-resourced, struggling. The owner of the company rarely paid themselves. And so we did as much as we could to help them, but of course, the progress was very slow. I then left that nonprofit to go into private practice as a lawyer with the focus on helping entrepreneurs raise capital. So I have been doing that for 16 years, have seen some wonderful success stories, but also a lot of folks still struggling. In 2009, I co-founded the Sustainable Economies Law Center. And the very first thing we did was to advocate for a change to the law to make it easier to raise money from investors in your community and not be limited to, having to only speak about it privately or limited to only wealthy investors. It was possible before that, but it was very challenging. Amazingly enough, the Jobs Act passed in 2012. This is a picture of the back of my head at the White House signing ceremony. And then it did take 4 years for the regs to go into effect, which was kind of shocking that it would take that long. But finally, in 2016, it did become available. Pretty soon after that, I met Michelle Timish, which was like a pivotal moment in my life because she's absolutely amazing. And she had decided, based on her own experience, that she wanted to start an investment crowdfunding platform, totally committed to funding those businesses that are not on that venture capital path, the 99% of businesses that are really contributing so much to our communities, but are just so poor in terms of their ability to access capital. And so together we launched Crowdfund Main Street. Michelle also joined the law firm that I run to help our clients do the legal work to be able to raise funding. In 2019, we started a club called Angels of Main Street, which is a group of folks all over the country who are committed to supporting entrepreneurs that are raising money using crowdfunding. And we've seen some good progress, but honestly, we have been frustrated that it just hasn't had that massive shift of, massive amounts of money pouring into these businesses the way we hoped. So we keep asking ourselves, what is still missing? So we've done a lot of thinking about this, and we believe that a physical gathering space where folks can meet face to face, and community residents can meet local entrepreneurs that are raising money and get to know them. Because change moves at the speed of trust, and trust is really built through relationship building, which, we're human beings after all, and meeting physically in a physical place, sharing food, getting to know each other. That's the way trust gets built, which will result in more people feeling comfortable with investing in small businesses in their own community. And then on the community side, community residents need more understanding of what it means to invest locally. Most of us have no education in that at all. If we have a financial advisor, they're telling us to put all of our money into the stock market. So we need some education to help people be more empowered about moving some small portion of their portfolio into local investing. The entrepreneurs themselves need a lot of support. You can't just get a crowdfunding campaign up and running, by like typing a few things into a platform and boom, you're ready. It's a highly regulated activity. So they need support with the legal work, the accounting. We also think it's very helpful to have a locally branded investment platform, which is, thank goodness, we have Michelle's business, Crowdfund Main Street, which is already a licensed platform in good standing, and we can do locally branded platforms. So we can do crowdfundbaltimore.com. We've already done one for Montana, where we've had quite a few businesses getting ready to raise money. That really helps build the excitement locally for folks in that community to invest locally. And then we would also love to see support. This probably isn't essential, but it would be very helpful to get support from philanthropic organizations, impact investors, to make it easier for regular folks to make these kinds of investments by providing guarantees. So it's like a backstop in case things don't go well, where you could at least get your money back, maybe matching investments, things to kind of make it so that not all the risk falls on the local community residents. So with all of this in mind, we did go ahead and buy a building about a little less than a year ago in downtown Baltimore. It's a beautiful building, and we were able to raise funding to buy the building. And we have been working on getting it up and running in terms of a hub where people can meet small local businesses and invest in them. And, in addition to that, we would love to really grow the ecosystem even further than that. So in the building, we'll be providing acceleration and preparation for investment crowdfunding. The building provides income from the upper floors, which are residential, to allow us to subsidize the costs of supporting the entrepreneurs, and also to support education for local residents, to connect the two groups so that money can flow from the local residents into investments in small local businesses. And we hope to eventually have a fund that allows us to make follow-on investments in the founders who are successful with crowdfunding. And the exits that we're helping to support are all about building community wealth. So in terms of the exit that we will ultimately have for Opportunity Main Street, it won't be, a sale to a greedy real estate developer. It'll be an exit to community or an exit to our tenants, so that the building can continue to operate with a benefit to the community. And so what is our business model? How do we actually make this work financially? Because this is not a nonprofit. We do want to be a profitable business. So on the upper floors, we have short-term residential rental units. We're in the process of getting the permits to do that now, to build those out. And the good news is those furnished short-term rentals are very, very in demand in this part of Baltimore. There's a lot of stuff that happens, like medical, people who come for short-term medical treatments or medical employment. There's a lot of big medical institutions nearby. There's just a real undersupply of short-term furnished rentals. So we believe we can make a nice revenue from that, which again will allow us to subsidize the activities on the first floor. And then there is a basement that we can rent out as commercial use, probably to artists and makers. And on the first floor is where the activities will happen that will really support the entrepreneurs. So we hope to eventually have a commercial kitchen, a cooperative retail space so our entrepreneurs can show their wares and sell their wares, a coffee cart so people can come and hang out and have coffee, places to meet. People can host events there. We did just have our very first event there a couple days ago that we're super excited to talk about a bit later. And Michelle lives on site, so she manages everything. And as I said before, we will target an exit to community in year 10 so that all of our investors can get paid by year 10, and we can make sure to keep the wealth in the community. So the total project cost is about 1.5 million. It is a little more than we originally hoped, which isn't a big surprise given escalation in construction costs. We've raised about 815,000. We're offering 2 investment opportunities. We offer a preferred equity option with a 2x preferred return that gets annual cash distributions from our profits, and then senior secured debt that is actually secured by the building, so very low risk, with quarterly payments. And we've already been making payments to our existing debt investors. And this investment opportunity is open to accredited investors only. Hopefully maybe someday that could change, because doesn't exactly fit our philosophy, but just to make things simpler, we decided to offer it to accredited investors only at this time.